Hello, everybody. Brian here from quantlabs.net. In this video, I'm going to go over, I've had this before, I've shown it before on my YouTube channel. This is now being made available as a free video and demonstrating the capability of this regarding my deep ETF analytics. So basically what I've got here, I've shown this as well. I can track over 64 segregated market sectors globally. So these are them. So these are for the last 30 days. And out of that, we have 64 in total. These are the monthly returns of the last 30 days. So you can see what is profiting right now. These ones right here, leading commodity metal, commodity agriculture, US crypto, overseas Japan, and so on and so forth. And that's the uh, monthly return among those categories. And I'm going to show you what they contain here. As I said, there's over 64 categories. So each one can generate basically a chart like this. And let me just crunch that down there. So each one of these can basically generate basically a professional looking tear sheet. In this case, we're looking to look at US value, and each one, this is how it works. We have our standard benchmark, which is the QQQ, which has been probably one of the best performing instruments out there in terms of ETF as a benchmark for the standard benchmark. And this goes all the way back 1 year. So that's our look back for 1 year. In here in blue, that's our combined strategy of all these ETFs for this particular category of US value. And you can see here, it did outperform up until right in here in May or June. And then it started to not, it didn't uh, go up as fast as the markets or the QQQ. Also in here, you'll find all the standard performance-based metrics. I'm not going to go into those, but one thing that most people use well, there's two actually. There's this one right here, the Sharpe ratio, 0.94 for the strategy, benchmark at 108. So it is underperforming the strategy, the combined ETFs. Anything over two is considered very good. Also, you want to look for the max drawdown. So as long as the max drawdown is no more than 15% over the last year, that's a pretty good investment as well. And the other thing you may want to pay attention to is at the bottom here is this. These are your monthly returns. Okay, so you can see here June was a very good month for this. July was okay, and then August was negative again. So not the best um, combined category. But what I'm going to do is I'm going to go through these and just close off all of the categories that are not performing higher than the benchmark of QQQ. Okay, so we're going to go through that now, just show you all the different categories. So value did not work, and you'll see here it's really US based ETF providers. So there's a huge um, concentration of US centric view of this. So value is not profitable. Um, as well as utilities is underperforming, transportation's underperforming, US tech is outperforming, so I'll keep that open. The next one we have is SP, which is Standard and Poor. So that's kind of outperforming now. I'm gonna. This is a tough one. I'll keep that open if you want. Also, we have here small cap, so that's not performing against the benchmark. Um, this one's sort of. We already saw that. Um, so we have shorting ETFs. That's outperforming. I'm not a big fan of those. Also, we've got semiconductors. That's outperforming. We have retail, which is not performing. We've got semi. We've already seen that. Nasdaq's barely outperforming. Momentum is underperforming. And again, this is where the strategy, this category in blue, is underperforming the benchmark of the QQQ. So that's closed off. Nasdaq, we looked at that. Material underperforming. We've got large cap, that's basically in line, so I'll just close that off. We want only things that outperform. We've got health, that's underperforming. We've got growth, I'll just close that off. They're just better ones to focus on. ESG is outperforming. Energy is definitely outperforming there. Dow Jones, not much better. Dividend income, not great. Crypto, you can see here it outperformed in July. Early part of August, it's underperforming, so that's a no-go. So all crypto is not to be considered here. A lot of that's grayscale. Um, Communications, no good. Cloud underperforming. We've got biotech underperforming. We've got treasury. It's useless kind of pretty well. Real estate's outperforming. We have Latin America's outperforming. Japan's outperforming. Europe's outperforming. Overseas currencies not as underperforming. We have overseas Asia. Close that off. We've got Africa, Israel underperforming. We've got my watch list underperforming, so that's no good. Inflation underperforming. We also have financial corporate closing off. We've got financial strategy. I'm gonna close that. Finance currency. We have metals kind of outperforming there. Commodity gold is underperforming lately. You can see that here, so no point in keeping that on. We've got energy. That's no good. Actually, I'm going to keep that open. Agriculture's outperforming. We've got strategy, cumulative commodity strategy. We've got materials underperforming. And lastly, energy. Okay, so those are what we have. So we're going to go deeper now into this. So let me go back here. So the first one we have that's doing well, obviously, is tech. So under here, just so you know, a lot of these are custom generated via my Python scripts I've written over the last year and a bit, and these work really good, as you can see. So let me just refresh this. Um, so we're going to run this, and hopefully by the time, this is going to be a very long video. Okay, so I just launched it. All right, so back we go. All right, so what we have here is the tech, and let's see here. Okay, so we've got here um, our categories here. So what I can make available on my new Substack, this is who this video is really geared towards, is I'll make these files available pretty well on a daily basis. Um, but what we're going to do is we're going to go through each of these profitable categories. So the first one is by name is US Tech. Um, so right here. So in here, I give basically the self-contained HTML file, which is really equivalent of a PDF. You just open up with a browser, and then each one will have the ETFs return performance. So in this case, what we're looking at here are all the tech ETFs available. And again, these are all available on Interactive Brokers, world's largest retail uh, broker globally too. So these are all the ETFs available. Now, for my analysis, and they're very specialized: Global X, robotics, artificial, autonomous and electric vehicle. You can see a lot of these. These are the names of the providers. These are all your big name providers: Global X, Fidelity, Alps, whoever that is, First Trust, iShares, and so on. Okay, So corresponding to that, we also give this one as well. This is an important one because these are the weightings of what is recommended from my optimizer. If you were to put money into all of these ETFs. So loading up the other one, these are the average return. So just to show you, this number right here is the monthly return, or I think the annual return so far of these ETFs. A lot of them can be negative. A lot of them, about 90% can be unprofitable. So that's one of the dangers of these ETFs. So if you scroll to the bottom here under the ETF and the category name, what you'll find here is the weightings that would be recommended if you were to bet all of these ETFs in one set of trades, like a basket of trades, focusing only on this case U.S. tech. These are the recommended weightings. So anything that has zero is either not performing all that well, and you only want to pay attention to the ones that are um, performing. So what I'm going to do now is load up my TradingView software. Now you'll note here, I'm not using a platform, as you probably know if you've been watching in the past. I use TradingView, just due to the fact of it's pretty well one of the largest platforms out there for this sort of thing, where you can do automated trading and all that fun stuff. So what I'm going to do is I'm going to go through this and show you um, the performance of these individual ETFs. So here are the best performing ETFs. Okay. So usually I only focus, depending upon the allocation. You can see here we got one that's at 21%. We've got this one at 58%, and this one at 10%. So we'll focus on those. So the first one we have here is LETB. So it's come under funds, LETB, if it's available. So this is advisor share, trust advisor share, let Bob AI powered momentum. So you can see here, this is not um, a very good ETF. So I'm going to put in 1 year performance. You can see that. So you can see it did run up, and then it just tanked as of July here, August 23rd, and has not recovered. So this was the time to invest and hold into the ETF. And just like Bitcoin, it just tanked. It has not recovered at all. Not a very good ETF. But I just went through this one's a pretty good one, AIQ. So if you load up AIQ, Global X Artificial Intelligence and Technology ETF, this is what you want to see. That's exactly what you want to see, just a nice run up and no drawdown whatsoever. So that's a definite ETF I would include in your portfolio. Um, there's ways to optimize on the weighting if that's a concern. And then the next one we had was this one, IYW. So this one, iShares US Technology ETF. This one looks good as well. Just remember on the unit price as well. Um, Depending upon what you want to do from a risk management point of view, I'd probably, let me just see what the other one, the AIQ, what's the price of that? That was almost $100. This one's a lot cheaper at 28.34 per unit. Personally, I'd rather go with this one because it's lower priced, lower risk per share or per unit. So that's something to strongly consider as well when you're going through this stuff. Okay, so let's move on to the next category here. Let me just close that out. So that's US tech. So you can clearly see how this works. So here's the shorting one. And again, if you go through that directory listing right here, you'll probably be able to find it here under short. Okay. So here are your allocations that you want to pay attention to. Again, where is my trading view? You can use any tracking software you want. Website doesn't really matter. I just like trading view for a variety of reasons that I mentioned in past videos. So the first one we want to look at is FNGS at 68%. allocation. So FN, FNGS, was that it? FNGS. So sometimes these are not available for whatever reason in TradingView. So it's not available all. Okay, so this is, I don't know if this is a short sale volume. Yeah, so this is really not worth anything to worry about. But this one you can look at is a Vault, VALT. So this is Gold Bullion Fund ETF Canadian Dollar Hedge Series. Boom. Now that's year to date. It looks fairly flat. Do you want to hold that? Maybe not. You want to hold something that gives you, is it showing you a predictable upswing moving to the upright? That's what you want to get a nice consistent return. There's a bunch of them here. I'll show you. All right, so this category is not that great from what I've shown you. Okay, so those are shorting. The short category I don't like. This one's going to do really good is a semis. These are semiconductors. So out of that, this right here. So these are the ones that are performing. So the only one that's performing is this one, the USD. So let's check that out in TradingView. USD. So this is that right? ProShare Ultra Semiconductor. So these are just purely semiconductors. Look at that. Nice recovery. Really good ETF. So if you compare that to, let's say, NVIDIA, which is one of the top performers, you'll see the difference. Okay, so NVIDIA is outperforming this one. Um, but what can happen is if it's a large stock, it can go through a downswing. But this one seems to be heavily concentrated on NVIDIA. Okay, but that's a really nice ETF, this USD. And that's all you have for the semiconductors. So let me close that off. All right. So the next one we have is NASDAQ. Uh, so that's NASDAQ here. Okay, so you can see here the allocation. So we got a bunch here. Um, so back to trading view. So the first one we have here is, uh, we'll look at this one, NUSI. NUSI. Okay, so that's a nationwide NASDAQ 100 risk management income. This one's not too bad, but it's not too bad. It hasn't drawn down as much. If you were to factor in the NASDAQ itself, like let's pull up the QQQ. QQQ is outperforming. So that one's not the best. That's why I don't like these kind of ETFs, but you can visually see which one's doing fairly well. So here's TDIF, TDIV. So First Trust NASDAQ Technology Dividend. This might not be a great one either. So this one's not so bad, but the QQQ is still outperforming. But the difference here is, again, the unit price is not too bad at $58. So if you want dividend income, this might be an okay one. It keeps in line with the QQQ. All right, so let's go to the next series of videos here. So that's NASDAQ. And then here we have the gaming. So this one doesn't look like it's doing so great. But it has had its bouts. So I could probably show you this one. This is all the uh, Vegas related kind of stocks like betting and all that. So in here, we've got US gaming. So here's some of the other ETFs that might be a surprise. So here's TradingView. So our first one's BJK. EJK, Van Eck Gaming ETF. So it's gone flat. Not a good one. Next one we have is ESPO, Video Gaming and Esports. Again, same thing, flat. Odds, ODDS, Pacer Blue Star Digital Entertainment, same. Not a great category. We kind of knew that was flat since here April. So our next category is ESG. You can see how it's kind of outperforming our benchmark here. This will be an interesting one. So US ESG right here. Again, forget your political where you stand on this sort of thing. Shouldn't matter. It's about getting returns. But some people may not like this ESG, and that's fine. You don't have to buy into the ones that you don't like. So the first one here is, I think we saw this before, is LMBS, low duration opportunity ETF, very flat, highly volatile, not a great one. And anything else? KCCA. This one I remember was a good one. So this is Crane Share California Carbon Allowance strategy. This is what you want to see. These kind of winners. See how it's gotten a lot more steep? Without going through this process that I'm showing you, you probably would miss out on this one. And this one may be really good as whatever California does on this allowance, but there's an ETF focusing on that. This could be a good long-term winner. Okay. And without that, you wouldn't know without going through this process. I found going through the exact same process, the Texas State College fund as well, which has done amazing. But this is another one that looks really good, this KCCA. And again, you want to make a nice return and forget your politics. This is a good one for that. All right. So let's go to our next category. Next category is so we have here energy, US energy. Okay, so we only have two here. Is the first one's crack. I think those are frackers, oil refiners. So you can see this one's not too bad since January 23rd. Nice steady return. I mean, $30 to 34. That's a 10% return. Better than what's going on in the general markets right now. Our next one is UGA, gasoline fund. Same thing right here. $53 now it's at 72. That's a good winner. Okay. Again, forget all your politics and how you feel. You can go into whichever one excites you. Okay. I'm just showing you what's out there that's making some good coinage. You cannot like this is raw data that you're seeing. This one's interesting is real estate. And I've talked about this in the past. To get return in real estate, you can do this by investing in the following ETFs. I'm going to show you. You don't have to hold on to physical real estate as well as putting up with the BS of being a so-called landlord and the risk of that and the law goes against you and all that fun stuff. So here we're going to look at the real estate. I think it's right here. So we want to look at that one. Okay, so here's our allocator. So we have IYR we'll look at, and these two. Okay, well, let's look at this one as well. Now, this is where it gets wonky. Okay, but this is a general reason why you may not want to go into real estate. Generally, right here, you're looking at ultra short real estate. Okay, so it's flat. So these ETFs you're going to look at could be bearish or ultra short ETFs, which tells you you don't want to be in real estate, physical or not, because you're losing money or it's tied up. And as I've shown you before, you could put money into other better performing ETFs to get a better return at a lower risk. That's what smart people do. Um, let's look at this one, XLRE, real estate sector uh, spider fund. So again, same performance. It's flat. DRV, Daily real estate bear 3 times. So again, you'll see these 3 time leverage, 2 time leverage. When you're seeing 3 time bearish, that's just to show you how bad it is out there. And these are the better performing ones. So you can see here it's flat, but signaling back that only the profitable ones, the 3 time bear, that's not a good sign for real estate. So why tie up your money into something physical or get a loan or a leverage? Not a good sign. IYR. IYR. Hey, real estate again. iShare. See, same thing. Not performing at all. You'll get these blips, but you're not going to get what I've shown you before, like the gasoline fund is up 10%. Just not really worth looking at, to be truthful. Okay, so that's real estate. Let's look at the next one we have here, Latin America. This may surprise people. So let's check out that. Um, okay, so this is when you go international. So there's a few international ones that are performing really well. This is one example. ETF, overseas, Latin. Okay, so let's see what we got performing here. EWW. Now, again, I don't make this up. This is raw data. These are raw charts. It's not smoke and mirror. So this is a Mexico ETF from 45 to $59 per unit. That's a nice return over the last year. Okay. And then we have here Argentina. Who would think all the problems they have in Argentina? Look at this. It's an MSCI, same thing. 27, it's almost doubled, more than double. Ain't that wild for Argentina? So again, why would you put money into something like into real estate when you can double your money over the last year with Argentina and Mexico up quite a bit too? That's a no-brainer to me. And again, it's not smoke and mirrors. You can verify this on your own. Next one we have is Japan. There's another really strong performing sector. So in here, let me pull up Japan, overseas Japan. And yes, you can buy into these ETFs directly, obviously. And this is just for today, current week, whatever you want to call it. So we have here two of them, actually three. So the first one we have is DXJ, DXJ, Wisdom Tree Japan Hedged Equity Fund. Look at that. Very few drawdown. Okay, really steady. And it's just you're going from 65 to $88. That's about a 50% return since there in March. Really strong return. Like, why would you not put money into that? Okay, but you got to know about these. You got over 1,000 ETFs to select from, 64 categories. You got to know what's performing. That's why it's important to take a look at what I do. And again, especially on the Substack that I've got brewing right now. That's quantlabs.net/substack.com. Let's take a look at the next one. So that's DXJ. You can see that's a 76% allocation. DXJS. Okay, here we go. Spider S&P 500 ETF. Oh, I'm sorry. So it's SDXJS. So Japan Hedge Small Cap Wisdom Tree again. Same thing. You can see this one's a little not as stable, but still nice trend up. Very few drawdowns. Again, that's a really good one to be in. And I'll show you the last one is DFJ as well. So Japan is very good. That's why Citadel, that's why Buffett are reopening offices in Japan for these kind of returns. And there you go. DFJ is the same, not as steep, but from 56 to $70. That's a really good, strong return. So Japan's very good. I've talked about the USD Japan yen as well. That's a really nice trade as well. Okay. So these are really good ETFs for Japan. Let's go over to our next one. Close that is Europe. Europe, I don't think is as good. So let me pull up this Europe right here to see our allocations or weightings. So it's Turkey and this Hedge J and Greece. You think, how's this possible that these ETFs are doing so well? Again, I don't make the rules. I'm just showing what's performing. So I'll show you this one. This is Greece. Okay, MSCI again. Check it out. But here's what you got to be aware of. It's slipping from 40 to 35. But if you knew about it, you're going from 20 to almost doubling your money up until July 21st. And it's dipping. Will it come back? Nobody knows. But knowing this, I'd probably take profit if you already done it. Congrats. The other one to take a look at was Turkey. This one right here, similar story as Greece. Okay, here's Turkey, but you see, it's already taken off now from June 23rd, $28 to $39, another 50% return. Who would think about Turkey? Here's another one. HED, uh, HDJ, Europe Hedged Equity Fund, flat. So obviously you don't want to be in that one. Oh, oh yeah, I was showing you Greece. Okay, so let's go to our next category here. So that's Europe. Currency, financial currencies outperforming. All right. Is that US? Yeah, that's financial currency, not US. So uh, financial, looks like I don't have that generated. Finance currency. Uh, yeah, I don't have that generated for whatever reason. So we'll move on from that. So commodity metal, let's check that out. Commodity ETF, commodity metal, financial. Okay, so we're looking for commodity. Oh, here's the ETF currency, financial currency. I did find it. So let's see what we have here. So we have this one and these two here. So we go back to FXC, FXE. So this is currency share Euro currency trust, flat. If I remember, this was a good one, USDU. Bloomberg US dollar bullish fund. Boom, it's starting to move now. $25 to $27. That's 10% since July 23rd. That's because of the US dollar. So if you want to get exposure to the US dollar, you know where to go, USDU. This one will also look at ISTB. ISTB is right here. Core 1 to 5 USD bond. Okay, going down, not looking good there. All right, so that's the financial currency. Let's look at the commodity metal. Was the next one I had right here. Okay, so this is another set of interesting ETFs that you might want to know about. This one, SLX, we've got DBP, we've got IEZ, and JJC. So let's look at these in good old trading views. So the first one we're looking at is SLX, that's steel, Benex Steel. This one's doing okay, not the best, 55 to $65. I wouldn't complain about that, but it's when it does the no trending. I don't know. Let's look at this next one is DBP. Precious Metal Fund. Again, flat. JJC. That's not listed here. JJC. So it's not in TradingView for whatever reason. IEZ. IEZ. Oil equipment. Again, now you can see it's starting to move again. $18 to $24. What's that? 30% return? Pretty good since the end of June. Unreal. Um, unreal. Okay, so let's continuing along. So that's okay. So we've shown. Oh no, we haven't shown you that. So we have commodity metal. I've just shown you. So next one's commodity energy. Commodity energy. Boom, boom, boom. Okay, the only one that we have here is this RJN, but it's not uh in TradingView for some reason. RJN, boom, no, not found. Okay, next one we have is we've got energy. So we only have three more categories. Agriculture, this is a good one as well. So these are sectors you wouldn't think about. Next one we have, let me go back here. So that is um, commodity agriculture right here. So here we are. Okay, so we have NIB, DBA. I think we've shown DBA before. DBA. Oh, no, Invesco DB Agricultural Fund. Very well. It's got a good trend, but it's these drawdowns I don't like. I wouldn't put money into that. I mean, if you want a little bit, but I've shown you so many good stocks. So NIB is not available in here. So there's that. Okay, so we got that. Lastly, two more. We got commodity. This is now not US focused. This is international. So let me load that one. So again, we only have commodity. I think this has been discontinued, this fund. Um, that's the only one before. Well, and then we have commodity energy. Let me just see if we have commodity energy. So RJN as well. So that's pretty well it. Um, as I said, these are very powerful files and charts and stuff that can show you some really good winners. That's currently here, September 7th, and showing you what to do, how to find it. And I've shown you some 50%. I've shown you one that doubled since the beginning of the year. I mean, what more do you want? You would have done very well with those ETFs. And they're, again, available through major brokers and probably advisors. If not, get another advisor or just stick it out and go with interactive brokers. Other than that, thanks for watching. Have a good day.